Hey everybody, today is July 1st, and today we're going to talk about the price of Bitcoin. We're going to talk about the monthly close that just happened yesterday, and we're also going to talk about whether I think we're in the bear market or whether we still have a chance of continuing up higher into perhaps 100,000 by the end of the year. Before we begin this discussion, please read this disclaimer. You can pause this video as you read it. Okay, so yesterday we had a monthly close, and the month closed red, which unfortunately that wasn't what I was hoping for. I was hoping that we could close green, but we closed red. So it's looking a lot more bearish than I had hoped for. But let's look more into detail as to what we may see in the short term. So obviously we've been in a 55% corrections or slash drawdown over the last 3 months. And we keep making lower highs and lower lows, right? The line chart for more detail. I did make a analysis last time talking about how we might have a possible bullish divergence happening in the last couple of weeks. Earlier this year we had a bearish divergence, which is when the price goes up, but the oscillators, our MACD and the RSI, comes down, and that predicted the crash, which happened, 55% crash. And right now the price has been going down for the last couple months, but the oscillators were going back up. So I was hopeful this would lead to a breakout. But it does seem like the price continues to go down, and now our oscillators are starting to wane, right? Starting to fade instead of going up, continuing higher as I had hoped for. You know, the MACD is still negative. We want MACD to move into positive territory, right? Same thing with the RSI, starting to roll over, you know, making lower highs. And I was hopeful that we would continue up higher and break this multi-month downtrend, right? But it does seem like we're continuing to make lower highs, and it does seem like instead of breaking higher, it's just going to continue down lower. So things are looking more bearish. Now that doesn't mean that I'm necessarily automatically bearish, and the reason why is that even though we had a monthly close, so by the way, I talked about in the last couple videos how I was hopeful that the pattern we were seeing, right, 6 consecutive green monthly candles, looking very similar to 2013, right, followed by 2 red candles and then a green candle, which marked the bottom of the mid-cycle pullback in 2013, going up higher. Unfortunately, we did end up closing the month red. I was hoping that this would close. This chart was done on June 22nd, right? I was hoping that this would close green, but unfortunately we closed red. And I'll discuss the monthly close after I do the daily analysis. But unfortunately we closed red, so it doesn't look exactly like this, but there's still hope, because I also talked about in a previous video, like on the weekly chart, the silver line, the 50 weekly simple moving average, right? This tends to act as strong support, but it's also a signal that if we cross below it, right, like we did in 2014 and 2018, that signaled the start of the bear market, right? And what we had was initially we would have the price come down, find strong support off the 50, the silver line, and then bounce strong, and then we would fade it and then fail to hold it and then break into a bear market, right? So that's 2014. This is 2018. We had another bounce here, faded, and crossed below and then enter a bear market, right? So right now we have touched this line, we've stayed above it, but we haven't had a bounce yet. So I was hoping that we would have a bounce. So even if we do have a bounce, we're still not out of the clear yet, right? We would still probably come down and retest, perhaps. And what I wanted to see is for Bitcoin to go up higher. If it didn't, it would come down and enter a bear market. So that's one scenario, right? The second scenario is that we don't get a bounce. We just fall directly into a bear market below the silver line. So I don't know exactly what's going to happen. Either scenario is possible, right? I can see that a lot of bears are entering short positions and then they get squeezed like they did in 2018 here and in 2013 here. I'm sorry, 2018 and 2014 here, right? Because it looks like an obvious short right now, and when that happens, everybody has the same position, and it's easy for the markets to go the other way and basically screw everybody, right? So I can see a squeeze up here, and if that happens, then we'll reassess and see if this can continue higher or whether we're going to come down, retest it, and fail and break into a bear market. But there is also the possibility that we break below, we just continue down below 30,000, right? And that, by the way, that line is around 30,000. And we talked about this, how 30,000 is really important because this is our Fibonacci support level, and support and resistance levels tend to act as strong. Fibonacci support and resistance levels tend to act as strong support and resistance levels, right? Like over here, this was strong support when we fell down in our first correction in early January, and right now we're basically going sideways. We're ranging within this finding support around 30,000, right? We see these wicks below. That means that buyers are coming in. But the question is, if this thing continues to roll down, will buyers come in next time, or will we break below? Because if we break below, I believe we're just gonna go plunge straight down to 20,000, right? Yeah, there's some weak support over here. It's not really strong support, right? This stronger support over here because we spent more time trying to break through this resistance level, and then we flipped it to support. But yeah, I think that if we break 30,000, since we spent so much time, right, I think we're just going to go straight down to 20,000, right? And by the way, we are still technically not in a bear market yet, based on this chart, right? So that's the first part that I want to make clear, is that I am not bearish until this thing crosses under the silver line, which is right about 30,000, which is this Fibonacci support line. So if we close the weekly candle below 30,000, below the silver line, I will officially turn bearish, right? So that's just like, the thing about trading is that you need to have certain levels in which you stick to those certain rules that you have, right? And I remain bullish until proven otherwise, right? Right now we're still above this line, so I will give benefit of the doubt to the bulls. But if we start to close under here, then I have short positions that I'm ready to take advantage of this possible plunge down to 20,000, right? So that's just how you're supposed to trade. It'll be great to see Bitcoin go up. I've been a Bitcoin cheerleader basically for the last 3 months. I've been making videos, and but if we can't hold, then of course, I'm a trader. I want to make money. I'm going to have short positions ready in the event that we break below, have a weekly and a daily close below 30,000. So just keep that in mind. If in my next videos I start to turn bearish, I don't want you to think that, oh, I suddenly turn bearish. No, like, I am still bullish until we break below 30,000, right? I've said many times that 30,000 is a really important support level. If we can't hold 30,000, then I do think we're going to plunge down to 20,000. So that is basically my daily analysis. Just to summarize very quickly before I move on, a possible bullish divergence starting to fade in strength, right, as the oscillators turn down instead of continuing to go up higher. The monthly close didn't end up closing like we did in 2013, so looking a little bit more bearish, looking like this could actually end up being in a bear market unless we hold 30,000, right? Unless we hold 30,000, which is our silver line here, we still have a chance of bouncing, and then from there, we will reassess and see if this can continue higher or lower. Now that we have the daily done, let's look at the bigger picture, right? The monthly chart. We had a monthly close yesterday. Like I just talked about, the monthly close was red. So we have 3 consecutive red months, which has never happened in a very strong bull market year, right? If we're comparing this year to the strong breakout year in the 4-year cycle of 2017 and 2013, right? There has never been more than 2 consecutive red candles right here, right? In fact, most of the candles in these like really bullish years, 2013 and 2017, were mostly green candles, right? So right now, there are more red candles than green candles in 2021, right? Which, if this is to be like a very bullish year, that shouldn't be the case, right? We should see more green candles than red candles. So the year obviously is not over. We're halfway through the year, but we need to start seeing bulls come in and push the price higher if this is to be a mid-cycle correction, right? If this is a bear market, then of course we're going to see more red candles, like we saw in 2018 and 2014, right? But we're going to have to see how the month of July plays out. I want to see if July can recover and we can go up a lot higher. I want to see us finally close a green candle, because if we close another red candle, then for sure we're in a bear market, because the only times we have that many consecutive monthly red candle closes in a row are during bear market months, right? Right over here, 2018, right here. Yes, we actually had 6 consecutive red candles when the bottom fell out, right? When we capitulated, and also we had 4 consecutive over here, 3 consecutive over here. So I mean, lots of red candles during the bear market years, 2014 and 2018. So we still have half the year left to recover, but we really need bulls to start the buyers start coming in, stepping in and buying, right? Because if this thing closes red again, then I think the probability of us entering a bear market is a lot higher than it is lower. So let's go back to the daily really quickly. Okay, let's talk about the, before I talk about the rest of the indicators, let me talk about the dollar, right? The dollar has been finding strength recently, right? Even though the stock market is doing really well, like making all-time highs, you know, the dollar is also starting to creep up, right? So the dollar generally will put downward pressure on Bitcoin, right? We can see during 2013 and 2017, when the dollar was weak, we can see that Bitcoin was strong, you know, 2013, 2017. But in the years of 2014 and 2018, when the dollar was strong, we can see that Bitcoin was very weak, right? 2014 and 2018, we were in a bear market. So the dollar and Bitcoin are inversely correlated. When the dollar is strong, Bitcoin is weak. When the dollar is weak, Bitcoin is generally strong. So the fact that we're seeing some more strength recently in the dollar, that's also putting downward pressure on Bitcoin. Another reason fundamentally why Bitcoin is going down is, of course, the hash rate has been going down. We talked about this in this last video, where China has been cracking down on miners, right? So this is actually good in the long term, but in the short term, this is going to put downward pressure on the price because the hash rate is falling. And when the hash rate falls, the price generally will fall as well, because the higher the hash rate is, the more secure the network is. So we want more mining power to be implemented in Bitcoin, right? We want the hash rate to go up, meaning more people miners are processing transaction and keeping the network secure, right? And that's going to make Bitcoin valuable in the long term, because in the past we had a lot of mining power concentrated in China. They were saying up to 60%. So now that China's cracking down, and a lot of the miners are actually moving from China to overseas in different countries, right? So that might take a while for them to set up their operations again. But once they get back up, I can see the hash rate recover and go up a lot higher again. And also, there are other miners, like American miners, right, that I've been talking about, Riot and Mara, just two of many. They've been doing very well in the last 30 days. See how they've been going up. They've actually been up over 50% in the last 30 days compared to Bitcoin, which has been basically going down. And the reason that's happening is because they're going to start to get more of the market share of the hash rate, right? Now that China is not the dominant country in terms of hash rate, like the concentration of hash rate in one country, right? And this is actually good for Bitcoin in the long term because it makes Bitcoin a lot more decentralized, right? There's a lot less likely that miners will collude and try to attack the network if they're not located in like just one country or one location, right? The more spread out, the better, the more decentralized. Not only the network will be, but also the hash rate, the hash rate will be, but also the Bitcoin as a whole, right? So in the long term, it's a good thing, but in the short term, of course, the price is getting affected by this. But we don't know how long this is going to last. As long as the hash rate keeps going down, that's going to put more downward pressure on Bitcoin. So that's another fundamentals that we have to think about, look at. But let's look at Fear and Greed Index, right? Still very low. The last time we were this low was last time during the pandemic. And but keep in mind that in a bear market, if we are in a bear market, we can stay this low for a long time, right? The question is are we in a bear market or are we in a mid-cycle correction? Because if we are in a mid-cycle correction, then of course, in retrospect, buying down here could be a good decision. But if we are in a bear market like we were in 2018, I mean, we can stay at these very low Fear and Greed Index levels for a long time, right? That's not out of the picture. That's not unusual at all, right? So, but like I said, I'm still giving benefit of the doubt to the bulls as long as we stay above 30,000, right? Now, let's look at our 2-year multiplier. I talked about this in previous videos, and this is why it's pretty tricky, right? Because every time we enter a bear market, it's happened after we overshot, right? We became very overbought. When we went above this orange line into the shaded orange/red area, we haven't moved above this. We didn't break above. We hit basically the top, the ceiling, and we started to pull back, right? And so it does look more like a mid-cycle correction, but we really need to see the buyers come in and push the price up again, right? Because it's very strange that we haven't really had signals of overbought that we had in the past. But the thing is, the good news is, as we continue to move sideways, the upper boundary is going to continue up higher. So if we do eventually hit that boundary in the future, maybe later this year, and overshoot it, that boundary is going to be a lot higher, meaning that our higher potential price is going to be, the potential top of Bitcoin this year might be a lot higher than if we peaked earlier this year, right? So that's another thing that's making me hopeful that if this is a mid-cycle correction, our final top could be a lot higher than if we just broke above and had a top earlier this year, right? Now the Pi cycle top indicator also is this predicted the crash, which in retrospect, unfortunately, I thought it would be a false positive. So I'll admit that I was wrong, but again, like I said, this indicator was created in 2019 after these crosses happened. So we didn't know if this could predict the future, and obviously it can. So if this ends up being a mid-cycle correction, or even not, like, I'll be using this indicator in the future because it's already proven itself that it can predict the future. So this is a really good indicator that I'll be using to predict future tops and potential bottoms, right? But let's look at, like, we had a cross here, right? But now that we crossed, and if we talked about this in previous videos, but a couple of days later, we actually crossed back into positive, right? Positive is when the green is above the orange line, and that could be a good opportunity to buy. However, we need the price to go above, right? That generally will signal an entry price, right? The price is still below, even though we crossed in a bullish posture. So I can't recommend that you buy right now because, well, at least based on this chart, right? Because based on this chart, the best time to buy is when it crosses green above orange and the price is above at least the orange line, right? And then when it crosses above the green line, that's when things start to get parabolic. But like we said in the 2-year multiplier, as long as this continues to go sideways, these bands will start to widen more. And that's going to give us more room if this thing were to recover and continue higher, to go up higher before it crosses into a bearish, which is this dotted line, right? So if this is a mid-cycle top, as I predict it will be, this is actually a good thing that we go sideways because it gives us, the oscillator, more time to reset, and ultimately will predict a higher top than if we just top over here, right? Pull multiplier is getting into oversold territory, which is this green shaded area, right? The last time we were here it was during the pandemic, and then during the bear market low, and then of course 2015, right? So it's been a while. This is signaling that we are very oversold, which is interesting because we talked about how I was hoping we would see something similar to 2013, right? And in 2013, it was over here. The Puel multiplier didn't even go into the green area, right, over here. So yes, it's very interesting. This is looking very oversold right now. So it's something to think about. Golden ratio multiplier is also very oversold. We're getting down to this orange line. So things are looking very, let me see. So just a point to make that if we are in a bear market, this could still keep going down lower, right? It doesn't mean that we should just keep buying right now, because even during bear market, it can still go even down to the lower boundary, right? So just keep that in mind. I'm not saying that, oh, now you have to buy right now, because if this is a bear market, if we do break below 30,000, of course this can go down below, a lot lower, right? But if this ends up being a mid-cycle correction, then this would probably have been a good time to buy. Of course, let me just say that I'm not a financial advisor, and you should always make your own trades based on your own decisions, but this is just what the chart is telling me, analysis-wise. We're nowhere near overbought. In fact, the last time this indicator triggered the top of the bull cycle is when we touched the dotted line, right? But we're not high enough to even trigger a dotted line to form. So so what this indicator is basically saying is that perhaps we haven't even topped yet. So this could end up predicting that maybe we're in a mid-cycle top, and perhaps that we can continue up higher. And and also, as with the other indicators, these lines will continue to go up higher as Bitcoin continues to go sideways, right? So if this does recover and go up a lot higher, then these other lines will go up a lot higher as well and predict a cycle top at a higher price above. So right now this is at 91,000. So if this does continue up higher, it'll perhaps go above 100,000, right? So a lot of potential upside if this is a mid-cycle correction rather than a start of a bear market. Z-score also is nowhere near overbought. It's very oversold. Has not signaled the top of the bull market for this cycle yet. So I mean, all of these indicators are basically saying that we're very oversold, and none of them have really signaled the top of a bull market, besides maybe the Pi cycle top indicator, right? But the Pi cycle top indicator has also crossed 2 times in 1 year in 2013, right? In April of 2013 and in December of 2013, right? Right before the bear market. So that doesn't. So what I'm basically saying is that a lot of these indicators haven't really told us that Bitcoin has topped and that this cycle is over, right? I mean, it's still possible that this could be a mid-cycle correction and we can continue up higher. So all I'm saying is, as long as we stay above 30,000, right, there's still hope, right? I mean, things aren't looking good. Like, I'll be honest, things aren't looking good, right? We had a red monthly close. We're starting to roll over the daily chart, and it's just not. We need buyers to step in right now and push the price up higher, right? And let me just do a quick analysis on this. So we've been basically trading in this range, right? And we can zoom in a little bit, and then we can break this down into 2 ranges right here. Let me show you. We have one range that we were trading in sideways when we had that first capitulation, right? And now we're starting to trade in this lower range right here, right? We have support along the body of this rectangle, and then these wicks below, which were bought off, right? And now we're starting to range in this area, right? Sort of like this. And so what we need is to buy a step in and break above into the previous box over here, right? Now let's collapse this into one big range, and we can see that if we draw one big rectangle, we are technically in a bottom. We're the bottom of the rectangle, right? We want to get above to the upper part of the rectangle, so we have a chance to break above, perhaps come down, retest, and then push up higher, right? Because right now, the more we get closer to 30,000, which is our Fibonacci support and the lower boundary of this rectangle, the more likely we are to break below, right? The more we test certain levels, whether it's support or resistance, the more likely we are to break above the resistance or below the support. So what's happening right now, right? We're making lower highs and lower lows. That's bad, okay? So unfortunately, the chances of us entering a bear market is a lot higher if we continue to range around this lower part of the rectangle and retest 30,000. Like we don't want to visit these areas because we already defended it over here, right? So the more we retest, the more we come and revisit these levels, the more likely we are to break below and possibly break below down to 20,000. So we really need buyers to come in and step in and push the price higher if we are to have hope that we are to stay out of a bear market. Lastly, I'll look at the stock to flow model. Stock to flow model is telling us that we are very oversold. In fact, if you look at this green line, we're at the lower boundary, right? Each time we were down at the lower boundary, this ended up being a good time to buy, right? Signaling either the bear market bottom or a mid-cycle correction, right? So if this model is to be true, then this should be signaling a good time to buy, right? And we also see that in a bull market, we see that we overshoot before coming down into a bear market. So if we are to overshoot, it should be around the $200,000 to $300,000 range, right? But of course, we need to see the buyers come in and push the price up higher so that this model is not invalidated. And because if we go into a bear market, it's going to be the first time in the last, or the entire existence where this model is wrong, that we didn't break above this red line, that we just continue down lower into a bear market. So, but at the same time, all these indicators are telling me one thing, in that first, two things. First, we are oversold, right? And also, we are highly likely in a mid-cycle correction rather than a bear market, right? But of course, that doesn't mean anything unless the price, right, also validates that thesis, right? Because if the price comes down lower and we do end up breaking below my bear market indicator, which is the weekly 50 simple moving average, the silver line here, then that's going to signal the start of a bear market, and all of these indicators are going to be invalidated, right? Except maybe the Pi cycle top indicator. So that's the analysis. Just to summarize, the fact that we closed this month red, last month red, is not good. We really need to close this month green, right? Because the last time we had this many consecutive red candles was in 2018 and 2014, which is where the bear market happened. And if we do break below, 30,000, which is do break below 30,000, which is basically the silver line, right, this is going to be the signal that the bear market will begin, right? So for now, I am giving benefit of the doubt to the bulls as long as we defend and hold above 30,000, right? But if we break below 30,000, then I will turn bearish and I will have to enter my short positions. I have short positions that are ready to enter. I have it all planned out. Hopefully we do defend 30,000, but if we don't, we will likely see it plunge down to 20,000, right? So that's the analysis. We're probably have to. I will update you in the next video and see where the price action goes. Hopefully we're able to defend 30,000 and probably range sideways for a while before trying to attempt to break above previous resistance, previous support level, now resistance levels. But yeah, I don't want to see us roll over and retest 30,000 because the likelihood of us coming down is a lot higher than us going up if we continue to retest 30,000, right? So right now I remain bullish until proven otherwise. But if we do break below 30,000, then yeah, just be ready to short if you have a short plan already. And of course, it can get really bad in terms of like volatility. So just be mentally prepared if this does break 30,000, right? Because I don't want anybody to get hurt or lose out on a lot of money. Just be prepared if you have to hedge your long positions or if you're 100% short. 30,000 is a very important level, and this is crucial, right? We absolutely must hold 30,000. If we don't, then we are probably going to enter a bear market. But I'll update you in the next video and see how the price action develops. If the bears come in, step in and push the price higher, or if this thing rolls over and breaks below 30,000. So we'll see what happens, and I'll update you in the next video. Either way, I hope everybody is prepared, not only financially to make moves to long or short positions, to long or short the market, whichever way it goes, but also be mentally prepared because remember, trading is a mental game, and it's okay to be wrong. Just make sure you protect yourself financially and mentally, right? During bear markets, it can get pretty tough on a lot of people. You know, a lot of people, they might ruin themselves financially. So just be mentally prepared in case this thing does break 30,000, right? And plunge into a bear market, because I want everyone to be okay. I want everybody to be happy and make a lot of money. But we have to look at all scenarios and realities, right? If this possibly can break into a bear market. So just be mentally prepared. And I don't want anybody to get hurt or anything like that. We'll definitely talk more about this in the next video. But for now, we have to wait and see how this price action develops going forward. And I'll definitely update you next time. Thank you for watching this video. If you found it helpful, useful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.